Good morning, Australia. It is Tuesday, March 31st, the final session of a brutal first quarter. While the Nasdaq slid 0.7% overnight on tech fatigue, our futures have pushed into the green, up 13 points to 8,500. Why? Because the world is panic buying what we dig out of the ground. Oil is sticky around US $115, and the domestic fuel crisis has reached a tipping point. We are looking at a green open led by the physical economy, while the banks and tech face a massive essential versus non-essential test. I'm Jay. Let's get into the headlines. The biggest news this morning: the fuel excise has been halved. Starting tomorrow, April 1st, the federal government is cutting 26.3 cents per liter off the tax on petrol and diesel for the next 3 months. This is a $2.5 billion relief package designed to stop the bleeding as petrol hits $2.50 per liter. But there's a catch. National Cabinet has also activated Level 2 of the National Fuel Security Plan. They are officially asking Australians to only buy what you need and use free public transport in Victoria and Tasmania to avoid mandatory rationing. The message is clear: the tax is lower, but the supply is tighter than ever. While the excise cut helps your wallet, the energy fortress is where the profit is. Woodside is testing $35.50 as Brent crude sticks at $116. But the real black gold right now is coal. Japan and Korea are panic buying Australian thermal coal to replace gas. New Hope surged nearly 8% yesterday, and Whitehaven is pushing $9.84. Coal is the ultimate insurance trade for 2026. If the index opens green today, it's the coal and oil producers doing 100% of the heavy lifting. Besides all the energy and mineral stocks, let's check the tickers making noise. Solpats, SOL, they managed to buck the trend yesterday, closing in the green after a massive H1 result. That 28th consecutive dividend hike is a beacon of stability, while the rest of the market feels like a casino. The Star Entertainment, SGR, some rare good news here. Star has secured a US $390 million refinancing lifeline from Whitehawk. It's a massive relief for shareholders, but the stock is still a battleground as regulatory heat stays high. TechPain, keep an eye on WiseTech and Xero. They got hammered yesterday as US rate expectations flipped. Markets are now pricing in hikes for the Fed instead of cuts. If yields stay at 4.4%, tech remains the punching bag. Watch out at 11:30 a.m. Australian Eastern Daylight Time. We get the RBA meeting minutes. The market is terrified that the 26-cent excise cut will actually be inflationary by encouraging more spending. If the RBA sounds hawkish and hints at a move toward 4.75%, the green futures will evaporate instantly. The banks, already dealing with a DXCIT strike starting today, will lead a sharp reversal if the RBA talks tough. Bottom line for your Tuesday: it is window dressing day. Fund managers are going to be rebalancing their portfolios for the quarter end, which usually means more volatility, not less. Watch the energy sector. Watch the RBA at 11:30 and fill up your tank tomorrow, not today. Thanks for watching. Smash that like button and let me know, are you holding cash through the quarter end or buying the bank dip? I'll see you for the final March wrap tonight.